Well, welcome back. This is week 1, class 2, and we will be building from where we left off as well. So we'll start getting into technicals from this class. So we'll be getting into candlestick anatomy, all type of candlestick patterns, type of market conditions, break of structure, recognizing the trend, and chart patterns. So it's a bit heavier, but this is quite important. You have to understand this lesson to understand pretty much the foundation of price action. So candlestick anatomy, let's begin there. So we have all seen candlestick charts before, but what do they really mean? So if you look at the bullish candle and the bearish candle, you have an open of the candle, you have a close of the candle, and then you have a high and a low, right? Ignore the shadow part. So again, on the bearish candle, you have the open on the reverse side of things, right? On the top, because it's a bearish candle. The price open there, price close there, and then we have a low and a high. It's extremely simple, actually. You need to understand what story each candle is conveying. So if I show you my charts, let me open a different pair. Let's just open Bitcoin maybe. All right, so for example, let's look at a random candle here. Okay, let's look at this candle here. This small candle which has its body right in the middle. So what is this conveying? If you look at the candle there, the candle opened there, right at that area there. Then it ended up pushing price all the way back down, right? So that's what the wick represents here. The wick represents, the low of the wick represents that the sellers have pushed price all the way down. And then eventually buyers came into the market. They pushed price all the way towards the top of the wick, right? And eventually when the candle ended up closing, sellers had control and they closed the candle right there where the bottom part of the body is. So basically this candle literally is giving us a story or in that time frame that what happened at that specific moment between the buyers and the sellers. So in this, what is this candle telling me? It told me that the sellers opened the market, right? They had some control, they pushed price down, buyers pushed price back up, but sellers had the final say when the candle closed, and the candle closed there. But the strength of the candle isn't as much. If you look at the body of the candle, what does that say? The sellers had control only they closed the candle right there at the bottom, but it isn't a strong candle. If the sellers had closed the body a little bit below, maybe towards the end of the wick, that would have shown me that the sellers were in complete control, right? So let me show you a few more examples here. Let's look at a bullish candle instead. Okay, let's look at this big bullish candle right there, this one, right? Let me zoom in a bit. So this, let's see what this candle is telling us, right? So this is a bullish candle. The bullish candle opens up there at the body, the below part of the body. Unlike the bearish candle, it's the reverse. So the bullish candle opened up here. And what do you notice happened? The bullish buyers, right? They push price all the way towards the top of the wick there. Let me actually show you that. Yep, you see the wick right there? They push the price all the way towards that wick. But if you notice the wick, the body did not close at the wick, right? If the body closed here, that would have showed me the buyers were in control towards all the way towards this price there. But what it conveys to me is that buyers pushed the price all the way up there, but sellers had control around this area and pushed price all the way back, right? And at one point in time, sellers also tried to push price. That small wick right there, they had a small say there, but eventually the buyers had control and they closed the price at that. So they opened up here and they closed the price right there. So this is a bullish candle, but the bullish candle is conveying that we have a lot of buyers in the market, but a lot of sellers had control at this area. And basically sellers were aggressively selling here. So that's what the body, that's what the candle is telling me. So let's look at a few more examples. All right, so let's look at, So let's look at this bearish candle here, this one. So this candle, what is it conveying to us? What's the story here? So the price opened up there, price closed here, right? So during that candle, during that time frame, this is the 4-hour time frame. So during those 4 hours, price opened up there, sellers had control, they pushed price all the way towards the low there. But for a brief amount of time, buyers also had some say, but sellers had a lot of control. So this wick here represents the buyers' aggressive buying, right? They rejected, and they pushed price all the way up here. Eventually, the sellers closed up here, right? This is so basically throughout this whole time frame towards this body is where the sellers had complete control. And that's a nice big candle because of the body. If the candle, if you notice, that shows there were a lot of sellers during this period of time. Let me show you another one. Let's look at a small candle, right? Let's look at probably this one, yeah, this bullish candle, right? So this is an interesting bullish candle. What do we see with the bullish candle? We see the price opened up there and it closed there, right? Almost at the same spot it opened at, right at the middle of the candle. So what does this show us? That there is an equal balance of buyers and sellers in the market, right? So this is an indecision candle. Why? If you notice the candle, you see how the price opened up there and the buyers pushed up the price all the way there, right? And even the sellers pushed the price all the way down here, but they couldn't come to an agreement and they ended up closing right in the middle there. This is an indecision doji candle. That's what we call it. So this shows us there is an equal balance of them, and therefore the direction at this moment in time, the buying direction or the selling direction couldn't be recognized. So let me show you maybe just one more. This is quite important, yeah. So let's look at okay, let's look at this one. This particular bearish candle, this one, right? This one. So you see how the price, the bearish, basically the sellers, they opened up the price there, they closed the price there. We had a low of the price there and a high of the price there. So what does this candle tell us? The price opened up here, closed here. So, but at that moment in time, this is a 4-hour candle. So in those 4 hours, the buyers had pushed price all the way towards these highs here. But this massive wick, right? This is called a wick, by the way. This stick, right? The end of the candlestick. It's called a wick. So the sellers basically they pushed price. Sorry, the buyers pushed all the price all the way up here, and eventually the sellers pushed the price all the way down very aggressively, right? So sellers had a lot of control at this area, right? And then you do notice that the sellers did push the price all the way here, but the buyers took control and they pushed price all the way here. So eventually the sellers decided to close the candle right there. But what does this entail to us, this candle? It shows us that there was a lot of selling pressure, right? Because if you look at the body of the candle, it is not exactly in the middle of the candle. It's at the bottom end of the candle. That shows us that there is a lot of aggressive selling occurring around this area there at the top, this high, showing that there's a lot of aggressive selling and the buyers were not in control during these 4 hours of the candle. That is a nice candle. That's a selling bearish candle. Yeah. So the gist of it is you need to understand what exactly each candle is telling you. What story is it conveying, right? Because once we start getting a bit deeper into it, we'll be understanding that how to pair not only one candle. We need to look at 2, 3, maybe a bunch of candles together and see what kind of story are they telling us, right? So that's how you understand. You need to look at each candle and understand what kind of story is it conveying to you in that time frame. And that's how you figure out who had the upper hand, did the buyers or the sellers, right? So let's look at the next topic. I think I might have a few examples here. So So this is a few examples that I just put up on the slides. So another one, the bearish candle that I've noted down here. You see how the bearish candle body is so massive? That represents there's a massive lot of heavy seller volume in the market, and sellers are in control. And if you look at the small wicks of the candle, I've mentioned that the buyers could not push price back and the sellers were in control, right? So that's what this candle tells me. Another one. If you notice this candle as well, you see how there are wicks towards the both of the sides, showing that there's an equal seller and buying pressure and it's balanced. Therefore, this is an indecision candle that I mentioned. All right, so same thing with the wicks. It shows us there's an equal balance. Let's look at a third example there. So this is the opposite of the seller's candle that I just showed you. This shows you that there's a wick all the way down. This indicates heavy buying pressure, right? A lot of rejection. Buyers were in complete control there because the sellers started pushing the price all the way down there, but eventually the buyers pushed the price aggressively all the way towards here, right? And eventually they pushed it here, and eventually they decided to close there, right? So you see how each candle is kind of telling you what happened in the time frame, and you need those candles to understand and understand price action. It's very important. Yep. So now that we have an idea of what candlesticks tell you, what kind of story they tell you, you need to understand the patterns in the market. I'm not a big fan of candlestick patterns in sense of that I don't like the names because a lot of new traders usually look at the names and they get a lot of confused trying to memorize these names. Memorizing these names won't do anything, right? I mean, like look at the name as a Polish abandoned baby. I mean, that gives me flashbacks, but there's no point, right? So you need to understand what are these candles telling you. So let's look at the single candle patterns first before we go into double or triple, right? So let's look at the inverted hammer candle, or actually let's start with the beginning, the hammer candle right there. Yeah, you see how the wick of the candle is just like the previous slide. This is a hammer candle. This candle shows us there is a massive amount of buying pressure, right? And there are the buyers are in control, and therefore this candle is named as the hammer candle. That's why they have terminologies to recognize these candles, which makes sense. But if you do understand what each candle is telling you, the story behind it, you don't really need to memorize these names. This is a great candle here. In the neutral section, the Marubozu candle. This candle shows, you see how this candle has no wicks towards the top or the bottom, right? So if you look at this white candle right in the middle, that shows you that the sellers were in complete control. There was absolutely no buying pressure or aggression during that candle, that time frame, right? So that is a clear indication of a seller's selling pressure candle, right? And if you see the blue one, that is the opposite. There was complete buying pressure in the market. No wicks towards the top, no wicks towards the bottom. There were no sellers pushing back. So the buyers were in complete control. So those are great candles to keep an eye on. Doji candle is something I showed you. It's pretty much shows that there is no volume in the market, and the bodies of the candle are extremely small. So let me give you an example. Yep, there we go. This is an example there. You see how that candle has pretty much no body to it, very tiny body. That is a doji candle. That shows there is very low volume in the market. Therefore, it has a small body, right? This shows me that the seller's pressure is dying off, right? Because if you see the seller's body, the candle's body, it shows me the sellers are losing momentum, right? They're losing. They don't have that much pressure in the market. If you compare it to this candle has a lot of selling pressure. So another one. So vice versa is the same thing with the bearish patterns. We have the shooting star, right? The shooting star candle, what does it show you? That there is a massive rejection towards the top. The sellers are in complete control. And if you look at this photo illustration, you see how price end up after that candle ends up dropping, right? That shows you there's a lot of selling pressure towards the top and sellers are in control. Gravestone doji is pretty much the same thing as shooting star. Spinning top, no need to keep an eye on that. So now that you understand single candle patterns, how each candle is giving you a certain story and uh, what kind of story it's conveying to you, now we need to look at how we can now take two candles at a time or three candles at a time and see what kind of story they're giving us together, right? So if you look at the double candle pattern, a great candle pattern that I like to look at is the bullish engulfing. So let me show you an example of a bullish engulfing. Let's see. Okay, this may be one. So two candles, right? And this is a bullish engulfing pattern. So you see how this candle, and keep an eye on these two candles, right? We have a small selling candle there with a small body, and then you eventually see a massive bullish candle towards the top. This is a bullish engulfing. And why is this a bullish pattern? If you look at the high of this candle and the low of the candle, right? Look at the high of the low of this candle, the high of this candle. Look at the body of this candle, right? Compared to the body of the previous candle right there. What do you notice? This massive bullish candle broke through the highs of the previous candle, right? So that is a nice bullish indication that the buyers are coming in control. And the candle also closed above the high of this candle, showing you there were a lot of buyers in the market, and therefore this is a bullish pattern, right? Another example, I'll give you the reverse example, right? Let's look at a bearish pattern. So let's look at this one. This is an interesting one. So we have a bullish candle and then we have a bearish candle. Let me use a different tool here. You see the high and the low of the candle? That's the low of the candle. And then you look at the bodies of the candle. So the bullish candle here, the first candle, is telling me there is a low there, there's a high there, right? And we have somewhat of a smaller body, right? But the second candle, if you notice, it has taken over the lows of the bullish candle, right? And gave you a massive body close under that low. Therefore, this is a bearish candle, a bearish engulfing candle. So this shows me that buyers were in control there, but eventually sellers came into the market at this area and pushed price all the way down, taking over the lows of this candle. Not only the lows, also the where the body of the previous candle opened as well, right? There could be situations where price actually doesn't close below the low, but closes below the low of the opening of the body, right? Let me give you a better example. So let's see. Okay, okay, this one. So look at these two candles there. Let me mark off the low, 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 high, high. And look at the bodies of the candle. Are there. So this is a bearish pattern. And why is this a bearish engulfing pattern? If you look at the body of this candle, right? And if you look at the body of the second candle, what do you notice happen? The body of the second candle closed below the opening price of the bullish candle, but it couldn't break the low of the bullish candle. So this is technically a bearish engulfing, a bearish pattern, right? A bearish indication. But we will be, once we come towards the entry candle section, we will look at what is a high probability bearish engulfing, what is a low probability bearish engulfing, right? So this is technically a bearish engulfing, but this falls towards the medium probability, towards the lower probability engulfing. So you don't need to get confused with the probability. Just understand what kind of story these two candles are telling you together. So let's look another pattern here. Let's see. All these double candle patterns are pretty much a similar thing, right? They show you two candles together and they show you how one candle overtakes another candle. If the sellers are overtaking the buyers or the buyers are overtaking the sellers, right? So now let's look at the triple candle formation. Triple candle is pretty much the same thing. We just take 3 candles together. Yep. So we have morning doji star pattern towards the left here. Let me show you an example. That's one of the patterns that I like as well. Let's see. So morning doji is a bullish one. Wait, let me show you where I can find one. Okay, so we could maybe look at this one. Or usually this pattern actually occurs towards the high or the low of the pattern. So let me see. Okay, maybe this one could do. So you see this candle here, this candle there, this bullish candle there, the small one. That is an evening star candle. Why is that? This might not be the best example, but I want you to ignore this this bearish candle there towards the right of it. So cancel that out. This one. Sorry. Cancel this candle out. So what do you see? So you look at the bearish candle. We're taking 3 candles together, right? We're looking at 3 candles together. So you have one candle towards the left, right? One there, the second candle, and then you have a third candle there. So the first candle there is a bearish candle. And then you see the second candle, how massive the wick of the candle is. What does that tell you? Again, the story is that the buyers are aggressively buying and they push price all the way back up, showing that buyers are in control. Then the third candle there shows you now the buyers, after aggressively pushing up the price and closing there, they completely took control and pushed price all the way up. So what did they do? They, in the previous example, we were looking at the high of the previous candle, right? The high and the low. But when it comes to this example, we look at the high and the low of the previous candle, right? The first candle. So in this example would be this. So it takes over the first high of this candle, and you see how this body closed above the high of this candle. That tells you what? It took over the high of the previous candle, the first candle, and it closed right above, showing you there was a lot of buying pressure and it broke above. Let me show you a better example. So let's go to a lower time frame. Better, easier to spot these. Okay, this is a good example. This is the evening star, right? This is the reverse of the morning star. Evening star is a selling pattern. So look at the high of this, right? I just mark them all out. So what do we notice with the candle number 1? This is candle number 1, the bullish candle. This is number 2, and this is number 3. So if you look at this candle right in the middle, the second candle, it had a massive rejection, right? Buyers pushed price all the way towards the top. Sellers came in control, pushed price aggressively down, and eventually decided to close there. So this candle here is called the evening star candle. But the third candle after it shows you that it broke through the last low of this bullish candle there, and the body as well closed below the low of this candle. This is a bearish pattern, right? Because we take 3 candles together to see the story that it's telling us here. But the first indication that it was bearish was the second candle here. That gave us, okay, I think it's time that the sellers maybe they want to take over. But the third candle actually confirmed it. It broke through the low of the previous candle, the first candle, and closed below. Let me show you another pattern, maybe. Some of these terminologies are quite dumb. So let's look at, if you look at each of these, they are pretty much the same thing, right? If you look at the evening doji star that I just showed you, and then you look at the bearish abandoned baby thing, it's the same thing. It's literally telling you pretty much the same story. But this candlestick representation on this one it is a low probability evening star. Why? If you look at the first candle there, the second candle and the third candle, what do you notice happen? The third candle couldn't break the low of the first candle. It is technically a bearish pattern, but it isn't a higher probability bearish pattern. It needs to break the low of the first candle. So those are the candlestick patterns. So you need to take all those hints the candle is telling you, and especially if you had to jumble them all up together, 2 candles or 3 candles, what kind of story is it telling you, right? So now that's a very important part of the lesson. Learn the price action side of it. Why? That's one aspect of the price action. Look at what the candles are telling you, right? Now the second part of it is type of market conditions, part 1. So we need to understand trends, right? What kind of trends the market has, what kind of conditions it is in. And the market has 3 type of trends: a bullish trend, which is an uptrend, a bearish trend, which is a downtrend, and a consolidation trend, which is a sideways trend, right? So the first one is a bullish trend that we look at, and it's quite simple, right? A bullish trend, what does it show you? It shows you, in this particular example, I have drawn out a simple illustration. You see how there is a high and a low, right? The H stands for high, L stands for low. So high and a low, and the next wave, right? What do you see happen? We see a higher high, right? Why is this a higher high? Because this high is higher than the previous high, right? So this is a new higher high. And then if you see this one, this is a higher low. Why is this higher low? Because the previous low, this low is higher than the previous low, right? And again, you see another higher high, which is higher than the previous high, and a new higher low, which is previous in the last higher low, right? So this shows you that the market is trending upwards, creating new higher highs and new higher lows, right? That's a simple bullish pattern, right? Let me show you an example. So let me close off this tool. 1 second. Okay, so let's look at a better example. Let me switch the pair here. This is Bitcoin. Bitcoin moves a bit different. Maybe DAX. Let's look at DAX. Yep. Okay, so let's look at this area here let me highlight that area. So this is a bullish trend. And why is this a bullish trend? Right? What do we notice happen? Price is creating a new, actually, let's start from the bottom there. There, okay. So we see a low, right? We see a second row low. Why is this low? This low is higher than the previous low, right? And we had a previous high there, and this high right here is higher than the previous high there. So this shows us a bullish pattern, right? A bullish trend. This low, right? This is a higher low. And if you look at the higher high, this high is higher than the previous high right there. So this is showing us a bullish pattern. Therefore, we're seeing new higher highs being created, new higher lows being created. Therefore, this is a bullish trend. So let's look at the flip side of it, right? Let's look at the bearish side. So we have a bearish trend, which is pretty much the reverse of it. It has lower highs and lower lows. So if you see the first wave, we have a high and a low. Then we have a lower high, which is lower than the previous high. Then we have a new lower low, which is lower than the previous low, right? Again, we have the third wave where we see a lower high, which is lower than the previous low, and a lower low, which is which is lower than the previous low, right? So this is a clear indication of a bearish trend. Price wants to move down, creating new lower highs and new lower lows. And let me show you an example as well. Again, let's use this area itself. Let me stretch this out there. There. Okay, yep, let's keep it that right there. So what do we see? We see a high, right? Um, yep, let's use this side first. We see a high there, then a low there. We see another high there, which is a new lower high, because this lower high is lower than this lower high, right? Previous high. So that's a lower high. We have a new lower low, a new lower high, a new lower low, a new lower high, right? And eventually we have a low and a high. We don't have new low and new higher lower highs been created. We see a sideways movement, which we'll get to in a minute in consolidation. But till here, we see price create new lower highs, new lower lows, showing you that the price is in a bearish trend, right? Yep. So that's a bearish trend. Very simple. It's extremely simple. You have to recognize the highs and the low and see the waves the price is creating. Let me actually show you just one more example actually before we move to consolidation. Okay, let's look at this area here. Actually, let's start all the way from here. Okay, so you see price, there's a low, right, and a high. Price then creates a new higher high, a new lower high. So it's bullish, right? Again, creates a new higher high, a new higher low. Over again, creates a new higher high, a new higher low, right? And you see this part, it doesn't create a new higher high. It just created another high, which is pretty much at the same level, right? So that's not a new higher high. That's just a high. We have another low, which is again just a low, but not a new higher low because it's at the same level. I'll show you consolidation in a minute. That is basically how consolidation works. But then eventually we have a new higher high, a new higher low, a new higher high, and a low, right? So this is the bullish trend. You have to recognize the highs and the lows and see if it has a bullish trend, a bearish trend, or a consolidation trend. I'll show you consolidation in a second. So this is consolidation. Consolidation doesn't tell you, it's not a trending move, right? It's a sideways trend. Therefore, this is not trending, it's just moving completely sideways. And usually what happens here is price here is accumulating liquidity, right? And if you remember the last class, I said liquidity is money, right? So in the markets, liquidity and money is pretty much the same thing, which means it's fuel, right? Just like how a car moves from point A to point B, it's either on a bullish trend or on a bearish trend. The car has to stop at a gas station to fill up gas, right? And then make its next move. So you got to understand consolidation in the same way. Consolidation is a place where price is filling up gas to make its next move, right? And accumulating liquidity is something I'll get into deeper later down in the course. But for now, you need to understand this is where price is grabbing gas to make its next move. And trading consolidation is difficult, but it can be done if the range is big. I'll explain what a range is, but as a beginner trader, I wouldn't suggest you to trade consolidation. Consolidation trading takes a lot of experience to trade it, and it may also be in the lower probability side of trading. So let me show you what consolidation is. All right, so let's look at consolidation here. Okay, there's a good example right here, actually. Yep, we could say this as an example. Let me highlight this area again. This area right there. Why is this consolidation? So You see how price creates a high and a low. The high is pretty much the same as the previous high. The low is again same as the previous low, right? So it's not creating new higher highs, no new lower highs, nothing. It's just moving sideways. A high and a low and a low, right? And eventually it does break towards the downside for a bit, giving us a new lower high and a new lower low, right? But this area right there, we see price stay in consolidation. Let me move this. So this is a consolidation area. And what do you notice happen with consolidation? Price moves sideways, grabbing a lot of gas, right? Pretty much fuel to make its next move. And eventually price breaks up towards the upside. You see how the volume comes in, it moves down sideways for a long time and moves up. Actually, there's a good example on gold, which happened today. Let's look at the daily chart here on the gold. And I've already marked out the consolidation. So this white box that I've marked out is consolidation, right? Why is this a consolidation? Again, we see high, a low, and a low, right? And every time it came towards this area, it had a low, right? It kind of tried making a new lower high, but sellers couldn't let go. And you keep seeing it, it keeps pushing. There's a pattern here that I'll go into in a minute, a chart pattern. But what do we see is price is moving sideways, right? It's been accumulating a lot of fuel, and this is the daily chart. So it's been accumulating a lot of fuel for a lot of days. And eventually today, it makes it big move towards the downside. This candle hasn't closed yet, but do you see the volume of the candle? That's a lot of selling volume, right? It eventually breaks consolidation after grabbing all that fuel there. So you see how, if you look towards the top of the consolidation, how price actually came in a bearish trend and then went into consolidation because it needed more gas to make its another move towards the downside. So that's what happened here. All right, let me show you another example. Where is it? Okay, yep. So let me delete this. Let me move towards a bigger chart. Okay, there we have another one. Right, this is a consolidation zone. Actually, let me mark it out there. This is consolidation, right? And why is this consolidation? We see a high, a low, a low, a low. Eventually, we see a new lower high, right? This is when the consolidation was about to break, but it hadn't broken yet because yet we haven't seen a new lower high been created, which happened all the way up here, right? And a new lower high. So this whole movement down here, price was stuck in consolidation. Price was moving sideways, accumulating fuel, not creating new higher highs or no new higher lows or no lower highs or no new lower lows, right? So just creating just highs and highs and lows, right? In the same level. So this is consolidation. And I mentioned range, right? In the slide. Range, what essentially it means is the distance from this high towards this low, right? This is the range, is the distance between these two, right? So this is the range between this high and this low. And you need a lot of experience to be trading the range, right? You can trade it, but you have to have a bit of experience to understand it. Like I always mention, trend is your friend. Best to follow the trend. All right, let's move to the next one. Okay, so now you understand these patterns, right? These trends, 1, 2, right? All these 3 trends. Now you need to understand why, how do you recognize that the trend has switched? This is extremely important and something which we will be discussing deeper in the SMC section. So break of structure. Break of structure essentially means that the trend is now switching, and how to recognize that the structure has been broken. So we recognize that the structure has been broken and the trend is about to switch by looking at a concept that we call 3-leg extension, which confirms a break of structure. So in this example that I have illustrated here, we see a bullish trend, right? Towards the left side, the white line. We see a bullish trend, and then we eventually see a bearish trend happen. And why is this? How do we recognize that the trend is now confirmed switched? Is what is we notice how the number one, the first leg there, right there, the first leg, a second leg, right? So therefore, the first leg, what did it do is break the low of the last higher low of the bullish trend, right? It broke the last higher low. So confirming that the price is now deciding to switch bearish. Then we have a second leg towards where the higher low was broken, creating a new lower high. The lower high is not yet confirmed, and it only gets confirmed by the third leg that occurs, right? Now this is a confirmed bearish trend. We see number one again. Number one, we see the first leg, which broke the last higher low. The second leg, which is now creating the lower high, but not yet confirmed. But the third leg confirms that this is a new lower high. Therefore, now this is a bearish trend, right? So indication one, indication two, indication three. That is your three-leg extension. Vice versa, we have a bearish to bullish breakup structure. So we have a bearish move. And then what do we notice happen? The number one leg, right? The leg one, which is this. This leg. This is number one. I don't know why I've remarked that wrong, but I'll fix that. But this is number one leg. And what do we notice with leg number one? What happened? It broke through the last lower high, right? Because this is a bearish trend, this is a lower high. So number one, price has broken the lower high, showing you that indication that the price wants to switch bullish. Second leg is this one, and this shows you that price is now retracing to create a new higher low, right? But this higher low is not yet confirmed, and that gets confirmed by the third leg, which pushes up, and that third leg breaks the new higher high, creating another higher high. Therefore, this is now a confirmed bullish trend. So you have indication one, the first leg, breaking the last lower high. Indication two, price is now creating a new higher low, right? And then a third leg, which confirms that higher low by breaking the last higher high. So we have 1, 2, 3, right? Let me show you an example. So let's see. Let's see where the trend switches. Okay, here. Breakout structure, the concept that I just showed you is quite the basics part of it, but I'm gonna get very deep into how the breakout structure works, right? So let's look at a simpler example here. Okay, maybe this may work. So towards the left, what do we see? We see let's start from the bottom, right? So we have a high and a low, a new higher high, a new higher low, a new high, right? A new higher high, a new higher low. But price goes a bit into consolidation. We see a high because it didn't break the last higher high. So this is a high, this is a low. But we then see what happened. This candle, this bearish candle breaks the last lower high. And let me mark that out. Right? So what do you see happen? Price was in a bullish trend, then went to a bit of a consolidation trend, and then eventually breaks the last higher low with this candle there, with this specific candle, right? So now that's leg number one, right? This is leg number one. Let me actually mark it off so it makes life a bit simple. So this is number one. Yep, this extension is number one. Then we have this extension number one. That's number one, leg number one. And then leg number two is when price retraces, right? To create a new higher low, which is the second leg. And that's number 2, the second leg. Then what do we see happen? Price then breaks down again, breaking through this new lower low created, right? So it breaks this lower low, confirms this new lower high, and now we see price shift bearish, creating the third leg right there, number 3. That's the third leg, right? So number 1, it breaks through the last higher low, creates that first leg, right? First indication that price wants to switch bearish. Second, price pushes up, then tries to retrace to create a new lower high, right? But it isn't confirmed till we got that third leg. The third leg breaks through the last lower low, the new last lower low, and gives us the confirmation that this is now a new lower high. Therefore, now we are completely bearish. As traders, we are not analysts, right? We don't only analyze, we like to trade, and we trade in real time. So as traders, we try to anticipate the third leg, the third extension. That is what concerns us the most. So number 1 and number 2 is what indicates to us, the leg number 1 and 2, that price is now anticipating to move bearish. Because if you wait for the third leg, we have now missed out on the whole move. So the second leg, at the top of the second leg, is where we want to get into the trade and then ride it out. But we'll get deeper into that in the later classes. All right, so let me give you another example. Actually, let me finish the slides here. All right, this is a consolidation to a bullish trend, right? So we see a high and lows been created, but no trending moves. And eventually, what do we see happen? We see a leg number 1. Leg number 1 breaks the last high there, these equal highs, right? It breaks that high there, breaks up, number 1, price wants to indication that price wants to move bullish. Second leg that retraces towards the high, broken high, and now it wants to create a new higher low, right? So it's created a new higher high, broken the last higher low, now created a new higher low as well, right? But this isn't confirmed till we see the third leg. The third leg is what confirms that this is now a bullish trend. The third leg shows us that the higher high, the new higher high, which was created there at the leg number 2, at the leg number 1, is now broken through and has now confirmed that this is a new higher low. Therefore, this is now a bullish trend. So let me show you a few examples, right? Let me finish the slide and show you another example. So another one, this is a consolidation which breaks into a bearish trend. So you have a trend, sideways trend, creating just highs and lows. And then we see leg number 1 create, right? The leg number 1 breaks the last low, right? Broke the last low, indicating that price may now want to switch bearish. And then we have a leg number 2 showing that maybe this may now be the new lower high, but gets only confirmed by the leg number 3, which breaks the last lower low, right? The last lower low, which was broken by number 3, which also confirms that this is now a new lower high. Now this is a confirmed bearish trend. So let me show you an example. This example here, right? This example here on gold, right? This is current price action. What does this tell us? Just like I mentioned, price was moving sideways, consolidation, broke through towards the downside, and has now made the first leg. The first leg is now created, which I will mark out. This is leg number 1, right? So it may retrace to here, it may retrace below. We are unsure. We are not trying to predict, right? We are trying to react. So that's leg number 1. Say it does retrace to here. And then now we want to see if it retraces and now creates a new lower high, right? And that lower high could be created right there with the last low was broken. This was the last low, right? This is all the equal lows. So the last low was broken there. It broke through, giving us leg number one. We see a leg number two there, right? Which I'm anticipating, and that's where most traders, good traders, would try to take a trade from. And they want to ride off that third leg. The third leg would be when this lower high is created, which has also broken the last lower low, right? But traders could maybe take this trade here, the new lower high formation, and just maybe trade it towards this low there. But this is something we'll get into deeper into the course. But this is what confirms a bearish trend. Let me show you another one. Let's look at this one. This is a good example, I think. Okay, so what happens here? Price was moving bearish. Sorry, consolidation sideways, creating just highs and lows, right? Not giving us any trending moves. Eventually, we see price break out of that box, right? It broke through that box with that bullish candle, right? So that there we see is an indication that price wants to shift bullish, right? So we have this consolidation trend, right? Let me actually use a different color. Let's say that's blue. All right. So we see price create a new lower high, but then we got that first leg. That first leg breaks off the high of the consolidation. That's leg number one. Then we have a leg number two, which retraces back into consolidate next to that last low, which was a high, which was broken. Sorry, the last high. So leg number one, leg number two, then we have a leg number three, right? This confirms a nice bullish trend. Leg number one, leg number two, leg number three. So that's how you recognize a bullish trend. So let me actually confirm another, maybe one last example regarding break of structure. Okay, we have let's look at a bearish example here. We have a big consolidation area here, okay? So price is creating highs, right? And just equal lows pretty much, staying in this range there. But what do we see happen here? Price started creating new lower highs, but yet it isn't a confirmed bearish trend. And the why is that? What is the main reason why? Because price is still stuck in that consolidation area, right? This is a whole area. And this gets confirmed when price actually breaks through below, right? That's leg number one. And if you notice here in this particular example, you see how price made that first leg pretty much all the way down below, but never actually gave us a proper retracement towards this area there. And most traders, what we would have seen here is actually take the trades right there, trying to find that third leg. But what happened in this particular example, price takes these traders out, pushes everyone out of the trade, right? Because one thing with the market isn't perfect. It's imperfect, right? We trade with probabilities. So in this particular example, even if you had taken this trade according to your trading rules, that's fine. But this didn't create the third leg that we wanted, and that is not a complete break of structure. Let's look at another example. I think that's good enough. I think with the examples, we'll look at more of these examples in the next classes. But this is an important one, right? I showed you what kind of trends there are and why does a trend switch, and what is a break of structure. So now you need to recognize those trends, right? While looking at a candlestick chart. So there are two things that I like to look at: is the body of the candles when drawing out my trend, and the second is recognizing structure. So let's see. Okay, let me move towards the left a bit. Okay, let's see. Right, okay, here. What do we see here? I use a lot of traders like to do it different when they're drawing out the trend. They like to look at different things. Like to look at only the candles, the body of the candles, not the wicks, right? So that's a new higher high, a new lower low, right? I'm not drawing it to the wick, just towards the body. A new higher high, a new lower low, a new higher high, a new lower low, right? A new higher high, a new lower low, a new higher high again, a new lower low, right? This is not a new higher high, this is pretty much the same high as the previous high, right? This high. And then creates a new higher low. So this is a basic trend, basic market conditions, part one. In part two of the topic, we're going to look at something called complex pullbacks, right? That's something we'll get into deeper. So a new higher high, and then what do we see happen? Break of structure occurs, right? And break of structure occurs not exactly here, but it occurs. Let me show you where. You see how price breaks through there. Price breaks through. Let me search. Let me show you this in the lower time frame. So in the higher time frame, it shows us the break of structure. What do we see happen? Price breaks the last low, creating a first leg there. And let me mark that off as well. Creates a first leg there, creates a second leg there, and this is where all the traders are now getting ready to enter the trade, right? Second leg there, and then creates a third leg towards the bottom. Now confirming a bearish trend by breaking these lows. And if you remember the candle pattern story as well, you have to now start thinking about combining them all, right? So price creates first leg, second leg, and if you look at the candles, what are these candles telling you as well? The candles are saying that the volume is dying off, small candles. And if you look at this candle here, right? What does that candle tell you? That is a morning star candle, right? It is a bearish candle showing you that the wicks, there's a massive rejection from the sellers. Sellers are completely in control around this area there. And eventually we see a third leg being created, right? So don't get a bit confused with that. We'll look at that in the entry candle section, but something to keep an eye on, right? You start combining all these factors together to see the trend and why you should be taking the trade. So again, I like to look at these to the body of the candle, right? You see how this is a consolidation there, just creating higher highs, just highs and lows, eventually creates a new higher high, but doesn't get confirmed by a third leg there, right? Instead, it breaks down there and then goes into a second consolidation area as well, right? Again, causing another high, a low as well. Breaks above, creating a new high, right? So you gotta recognize these trends. And just because a certain time frame is bullish or bearish, that doesn't mean other time frames are bullish or bearish as well. So let me show you in a good example here. Okay, let's look at USD JPY. Okay, so let's recognize a trend, right? Let's go to the daily time frame first. We delete these. I think these are my older markings. Okay, so recognize something here. Let me go all the way towards the front here. So we see a bullish trend, right? We see a high and a low, a new higher high, a new lower higher low. So therefore we are bearish, right? And this doesn't mean every single time frame is also going to be bullish. Sorry, this is a bullish trend, so every time frame is not going to be bullish. So if you go down to the 4-hour time frame, for example, right, if these yellow spots are the highs and the lows for the bullish trend, but what do you notice happen with the 4-hour time frame? It is in a form of a consolidation between this area, right? Just causing a new high, the same highs, creating a new higher low there, right? Confusing a lot of traders there. And then eventually breaks up. So we see a consolidation within a bullish trend. So not every single time frame is going to be aligned. And this is something we'll look deeper into in the multi-time frame correlation section. For now, I just want you to recognize the trends, recognize the structure, recognize when the structure actually shifts bearish or bullish or even into a consolidation, right? So I think we'll move chart patterns to the next class. I think it's a bit heavy for this particular class, right? So we'll end it here for today. So 1 second, let me stop